Hello, everybody. I'm always shocked when I come to such a conference to hear all about the industry, the millions that people have raised and the billions that other people have raised, and not to hear some solution dedicated to the audience. Most of the time, companies try to find financing. And the SPAC has only, as its basic structure, one big advantage. And this big advantage is actually the fact that it's cheaper to basically be a target for some financiers than to just go through the whole IPO process. It's cheaper and it's faster. And now that we have all these possibilities with the SPAC, I found it strange that we were limited to the S1 form, which, as you know, is very heavy. So we decided at Swiss Financiers, and sorry not to be able to show you all the slides because there's been a little bit of problem with the technique. We have decided to create some new product. First of all and foremost, for all small companies, the mini SPAC. The mini SPAC is a combination of a regulation A+, which now can raise up to $75 million. And instead of using an S1, we will use that Reg A+. This is also a recognition to Steve Dresner, the president of DealFlow, who opened this Congress this morning, because he has been the instigator of the Reg A conference, and this Reg A is now booming and growing. And people tell you, what is the future of the SPAC? Well, I don't know about the future of the SPAC, because nobody knows the future, but what I know is the mini SPAC has a great future because it will help a lot of small companies to go through. We didn't stop at the mini SPAC. We also did another colleague called the master SPAC. So what is the master SPAC in this? Well, when you have a normal SPAC, and I had prepared very nice slides to demonstrate to you all that, when you have a normal SPAC, the SPAC ends up either through a merger or through an acquisition. Now imagine that this acquisition could be done by financing the IPO of the company. You're going to say, well, it's a target, and I already made an IPO, so why should I do a second IPO? Well, actually, because in a SPAC, at the moment of acquisition, the SPAC loses value. It's just mathematical. There has been expensive lawyers' fees. We heard some of them before me. There are equally a lot of fees for the auditors, for the accountant, for all people around. And normally, acquisition tends to lose some of the value that was initially in cash in the SPAC. So the master SPAC is an acquisition through the payment of the fees and of the cost necessary to finance the IPO. Financing the IPO of the company allows not only a value creation, because as you know, in an IPO, you have the difference between the private market and the public market. This is the birth of the multiple, and this is also the birth of what is called later the price per earning ratio. All this results in the fact that the master SPAC is the first combination that allows to basically not lose on the target value, but at the opposite, to create value just like it would be in a traditional IPO. We didn't stop our imagination at that stage. We continued, and we looked at how is it possible to have a group of small companies work together. And I would like to draw your attention on this image. Everybody probably is familiar with the domino effect, where one domino pushes another, or where one domino pushes two others, which push four others, just like shown on this image. What is great with that domino effect can also be great with SPACs. A lot of people today are in venture capital. They are venture capital funds. And these funds are basically very often stuck. If you go to Wall Street, they're going to tell you, well, the company is not yet ready, it's missing a little bit of income. And well, when you'll be more mature, we'll listen to you. And the truth of the matter is a little bit different. They will never listen unless the company is a top hit. And unfortunately, statistics and odds are against the entrepreneur and probably against the SPAC either. I was laughing when I heard earlier somebody say, and rightly so, all the good targets have been taken, my goodness. How are we going to do now to continue that market since all good targets, all things that were reasonable, and he meant by that risk-free. But in reality, it's not that way. First of all, the market is completely disconnected from reality, totally. You could raise anything you want on the market, and the market today is open to anything, especially after 1 year of immobilization due to COVID. What does it mean? It means that the market is ready to take a lot more risk than the investment banker that sits across the table and who doesn't want to take that risk because he's protecting not your interest, not the SPAC interest, not the investor's interest, but his own salary. So what you need to have is to understand a little bit more how it happens. A lot of the requirements that you're bumping into, that you're basically not even thinking of being able to avoid, are actually inexistent when you talk directly to the market. And there is a way to talk directly to the market at a very cheap cost. And this is this cascading SPAC product. Why? Because it's a case where several sponsors who want to do SPAC, but who can't necessarily afford the 5 million or 10 million or 20 million necessary to sponsor the SPAC, will all contribute to one SPAC. Let's suppose that there are 10 of them, so each of them would contribute $500,000. And this SPAC will be launched. And a part of the proceeds of that SPAC will be reserved to the next level of SPAC. That means that one SPAC will push two SPACs. And using the same principles, the two next SPAC are going to push four SPACs. And this cascading SPAC will enable the market to take companies that are smaller, not to look for this huge deal with this impossible merger and these endless fees, but a multiplicity of small deals that will make more sense, that will be cheaper, and probably much easier to execute. We have decided at Swiss Financiers to extend that to a great degree because we said earlier that there could be a mini SPAC due to Reg A+. But there could be also a co-sponsorship, and this co-sponsorship can be done by a Reg A+. This gives the interest that the public is now able to be a co-sponsor, that people who are small investors can suddenly come to the table and basically have a bigger impact. It's not only by, like Robin Hood showed it, fighting huge investors, but just having same and equal chances. And isn't it part of the American dream? Some of you listening to me could think I'm a leftist, but I'm not. I basically simply believe that we need to stop saying to people 5 million, 10 million, or 20 million is cheap, because a lot cannot afford it. And so we need to have these deals made at the moment when the company really needs help. That means that, bankers have had a long tradition of lending umbrellas for sunny days. And we need now to lend umbrellas for the rainy days. And how do we do that? Well, we can do it through the co-sponsorship, where basically people or a group or community or Robinhood or whoever could come to Swiss financiers and ask Swiss financiers, to basically have some of the co-sponsorship shares, and therefore enjoy the benefit of a sponsor, which, as you know, are 10 to 20%, depending how you view it. There's one last point. Very often, if any one of you in this room, and surely it has, there are several people who have been in this case, have been creating funds, hedge funds. So you start typically by getting a first capital, say 100,000, 1 million, and you basically say, well, if I do a good track record for 5 years with that million or with this 100,000 initial capital, then at the end of these 5 years, I'll be able to show a great track record. And this is up to the point when you go to an institutional investor, and this institutional investor tells you, your demonstration of a track record is invalid. And you say, why? I mean, I took this 100,000 and I multiplied them by X over those 5 years, so why isn't it valid? The institutional investor will tell you, well, our minimum amount that we invest is probably around 100 million. And so, your track record did show that you can do it over 100,000. It didn't show that you can do it over 100 million. And one of the best solutions for that is to have a fund SPACs. What do I mean by that? Basically, starting by a SPAC that instead of going to an acquisition goes to basically incorporate the fund. A lot of people talk about the restrictions of the 2 years and of the 3 years that were implemented in the SPAC and the SEC reason to maintain those rules. But after extended discussion with the SEC, we found out that there is completely a possibility to go around that, which would mean that the SPAC or the future of the SPAC could be just a company evolving and becoming a hedge fund or a normal fund, so that instead of doing your test just with 100,000 or 1 million, which then will not be considered valid by the institutional investors, you will do it with a true capital that will enable you to have a real advantage when showing what really happens when money is managed by you. I would like also to emphasize on one thing. If you go on the website swissfinanciers.com, and this is not advertising, you'll find a list of 62 SPACs for 62 fields. And we are looking for co-sponsor for each of these SPACs, and we are willing to go in for half the money. So we are looking for 50-50 partners with us. These SPACs will cover several areas and will use several of the advanced techniques that I have just described to you on the SPAC matters. These techniques being patented for 10 years through a business method patent, so that the people who have paid for me to be here today do not lose their capital. I would like also to emphasize the fact that there is a great momentum with the SPAC now. A lot of people said in the press recently that the future of the SPACs was uncertain due to the SEC reaction. And actually, I love the XCC reactions because they avoid the idiots to use big names of stars to try to make what is the capital market, which is your retirement, the one of your parents, it was just Father's Day, and the one of your grandparents, and that basically, you know, everybody plays with the money unconsciously. In America, you've got a great culture of risk-taking. And it's a big mistake not to take risk. I heard before me, and these two ladies talk about insurance cases as top professionals and explaining the D&O insurance and everything that should be done in order to protect yourself from the risk. First of all, remember, when you protect yourself from a risk, you protect yourself first from the opportunity. Second, you have to remember that the D&O insurance, as they were proposed to you, have a nice way to work against the entrepreneur and against the SPAC. Let me tell you what that is. The only way a D&O insurance doesn't pay is to demonstrate the case of fraud. So what they usually do is they get a copy of your file, they go to the adverse party, and they show them the file and say, you can get something if we don't have to pay these guys. I experienced it in the past, and I cannot go behind somebody who goes in front of an audience to say that D&O insurances are saving anybody, because the cases of their payment versus their non-payment is about 80 to 1. I would like to finish on that particular matter about the SPAC by saying that we must not be blocked just on the major SPACs. What will rebuild the economy after COVID will be the small companies. And the small companies, small startups, can do a mini SPAC, raise up to $75 million, and basically, you know, be in a succession of deals. That means that's another thing that a lot of people lead you to believe. One SPAC, just one acquisition, or this SPAC. And no, there can be one SPAC, multiple acquisition, and no de-SPAC. And finally, about the insurance, so that these two ladies don't regret to have had me as a follower, I would like to say that insurance should come as a certainty for the investors, but that the investor is not the only one that needs to be protected, especially after COVID. As an investor myself, I hope that the people and the insurance will protect entrepreneurs, will protect all the people who have suffered during this COVID, and will do so to reduce the amount of compliance, of rules, and of requests that must be done to cash in for a premium that was duly paid. I would like to end my intervention in saying that all SPAC advanced techniques are at your disposal, that we're ready to license it to the law firms who want to use it, to the consultant also, and that we are ready to push the mini SPAC to be the next event. And look at this year. Remember that this year was triple the amount of last year in terms of SPAC. Well, for the time being, there has been 0 mini SPAC. But I bet anything, and I'll be here at the same table a year from now, that there will be a majority of mini SPAC done, because that's worth it. I thank you for your attention.